Monday, June 6, 2022, Monaco 64, home of alternative economics and contrarian views. So today we're going to look at how the Biden administration is continuing to torpedo the petrodollar. I did an interview with Tim Price on June 1st. Tim Price is a fund manager at Price Value Partners, and he said that the foreign policy of the US, especially towards Ukraine and Russia, all the sanctions, is basically torpedoing the petrodollar. And I think China is in the same position now. China has just warned that the US should stop playing the Taiwan card. They had some pretty harsh words and warnings back on June 2nd, on Thursday last week. And we're going to go over that and why I think it could get even worse in terms of the whole monetary, financial, economic, trade architecture for the world. Before I start, though, I like to say I'm sorry I didn't do the live stream last night. I was still feeling quite rough. I've had a cold for the last few days, and I needed some rest. I did do a video yesterday morning, which you can watch, which I thought was quite interesting. But of course, I'm biased. But yeah, it's not the end of the live streams. I'm sure I'll be 100% next Sunday. I feel a lot better this morning. So back to the topic of the petrodollar, or the post Bretton Woods dollar that's been really the reserve currency for the world, or the premier reserve currency. Of course, prior to 1971, the dollar was as good as gold. That was, of course, suspended temporarily by President Nixon. And ever since then, basically, it's been a political or military currency, really. The United States and its allies have forced other countries to use that currency. They've come, of course, with to an agreement with the Saudis. They came to an agreement with the Saudis back in the 70s to defend the Saudis, and the Saudis would only sell oil in dollars. And why did that matter? Well, because the Saudis and OPEC were the biggest oil producers, so everyone became dependent on the dollar. But that, even the petrodollar now is unraveling, I would say, and we've been speaking about this here for the last few years, and some people criticized us back then after we made videos about the petrodollar. They're saying, oh, how come the dollar hasn't collapsed? And I said at the time, it's like a super tanker changing course. It takes time. And I think we're almost at the point where we've gone from going this way to going the other way, i.e., the unraveling of the petrodollar. And I think countries like Russia and China have known all along that this was going to happen. That's why they've been buying gold. And I would say that the Ukraine war and the reaction to that war from the West, especially the United States, against Russia, has been a huge event. It's been like a black swan event. It's accelerated the demise of the petrodollar even more, because it's pushed other countries to look for other assets to hold instead of dollars. We know that the West, or the US, basically have frozen hundreds of billions of reserves that the Russians hold in the international banking system. And that's raised red flags for the global South, the people who are not in bed with NATO, the rest of the world, so to speak, the 100 and probably 30, 50 other countries that exist. And that's why I think the dollar is is doomed as a major reserve currency. I don't say it's doomed as a currency, even though I think all fiat currencies, especially the ones in the West, the NATO currencies, so to speak, are going to lose a lot of value because they've basically run on fumes, on credit and borrowing and spending, while the rest of the world have actually built up more balanced economies, I would say, and they have a lot of the resources, the populations. So now I think this could be even bigger, of course, because China is the biggest creditor in the world. It's got over $3 trillion in dollar reserves. And yes, I haven't seen people talk about what happened last week on Thursday. That was June 2nd, this past Thursday. Mainly because there's so many distractions, domestic distractions in the US, here in the UK. You know what the distraction in the UK is, of course, it's the Jubilee. And I think this is very serious. So what's happening in terms of foreign policy towards Taiwan and China from the US? Well, I think the US tried to create a new economic group, and they have, like an Indo-economic group with countries like India and others in Southeast Asia. And it wanted to include Taiwan in that group, and this was recent. But a lot of the countries that were in this group, they said they didn't want Taiwan because it would alienate or piss off China, and they didn't want to be in that situation. So what the US has done, they've sent representatives there after this Indo-economic alliance, so to speak. They've sent representatives to Taiwan to sign new deals, to do it bilaterally, so to circumvent the hesitancy of the other countries to have Taiwan in their group. And of course, the Chinese noticed that. So the Chinese foreign minister's spokesman, on Thursday was very clear. And I'm going to play the clip here for you. But before I play the clip, basically, he warned the US to stop playing the Taiwan card. And he also said that this could bring Sino-US relations to a dangerous place, and that the US should abide by the One China principle.
China is angry, and at a news briefing on Thursday, the Chinese foreign minister did not mince words. The insistence of the United States on playing the Taiwan card will only bring Sino-US relations to a dangerous place. The United States should abide by the One China principle and the provisions of the 3 Sino-US joint communiques, stop any form of official exchanges between the United States and Taiwan, stop signing agreements of a sovereign connotation and official nature with Taiwanese merchants, and refrain from sending any wrong signals to the separatist forces of Taiwan independence. These strong statements follow the announcement on Wednesday of the US-Taiwan Initiative on 21st Century Trade, which aims to deepen economic and trade relations between the two countries, a point that was underscored by Illinois Senator Tammy Duckworth during a joint press conference held with Taiwan's President Tsai Ing-wen.
I do want to say that it is more than just about military, it's also about the economy. And I'm here to support the President Biden's efforts in engaging in economic relationships and closer relationships between our two nations on an economic front as well as on national security.
So, yes, this is very serious. This could even lead to a major war, and don't really like to talk about that, but it's something that we need to consider. And there are signs out there that this could be in the future, in the near future. And I have to thank some of my followers for sending me things that show me that this could be possible. For example, if you look at Lockheed Martin Corporation, major military contractor, forming a very bullish flag formation here. It's a stock price. And then you look at BAE Systems here in the UK, major military contractor, making all-time highs. And this is in a year where the stock market is not doing well. And so what would happen during a major war to the stock market? I'm sure people want to know that. Well, I've done a very quick analysis here. It's very, I haven't really dug too much under the surface, but basically I've looked at the Dow back during World War I. So you can see there the arrow when the war kicked off in 1914. I think actually the Dow Jones Industrial Average or the New York Stock Exchange closed up until December of 2014. But you can see the market dropped massively when the war started in Europe. And then when it reopened towards the beginning of 2015, it rallied right back up and went even higher. In December 2016, it had more than doubled from the low in 2014. But then it came back down, and actually it went up about 20% from the beginning of the war to the end of the war, as you can see there. So it was kind of a mixed bag, the stock market during World War I. But one interesting thing is that it closed for months after the war kicked off. And then the other one, of course, World War II, kicked off in September 1939. And it actually, if you look at this chart, it didn't really go anywhere during World War II, the stock market. It was around 150 when it kicked off, and it was around 150 when the war, we're just above 150 when the war finished. So it was up just under 20%. Very similar performance to during World War I. So that's what could happen. So could we have like a shutdown of stock markets and other exchanges like we did in World War I, in the beginning of World War I? It's possible, but I would say the powers that be today need to keep control of things. So they'll probably keep the markets open, but I could be wrong. Either way, I think it's good to have again physical gold and silver outside the system. One group of assets that do well in wars, of course, are commodities, because wars are very destructive. They need a lot of material, and there's a lot of waste because governments really don't care about waste because it's your money. So I would say this could also be the reason why commodities and even the oil price are pointing to a lot higher prices, a major conflagration between major world powers. And I hope I'm wrong. Or it could just be warning us that we're going to have a major inflationary period. And that could be related to other things, but it could also be related to war. So that's where I see things right now. And for those of you in the UK who frequently ask me sometimes in the comment section where they can buy gold and silver, well, try Gold Investments. I have an affiliation with them. I have a promo code with them, Monaco64. They'll give you a small discount off the premium when you buy gold and silver from them and use my promo code. And I also have an affiliation with Glint. Glint is different. They provide you with an app and a MasterCard where you can spend your gold. So you open your Glint app, open the account, and send money to them, and they will buy gold for you and store it in Switzerland. Yes, I think they will. They have redeemed some gold for people, but it's a different thing. So you might like a bit of both, or one or not the other. So with that, let's quickly look at where the markets are this morning then. It's 10 to 9 a.m. London time. We've got spot gold at 1853. It's up about $2. It's been fairly quiet, gold. Low of 1848, high of 1857. Silver, on the other hand, has popped up fairly significantly. I know silver's been frustrating, but it's up 1.6% or 35 cents at 22.26. The high has been 31. Right now, the key level on the upside is 22.50. That was the high last week. Low has been 21.87. To the stock market and the index futures, the Dow futures up 0.5%, just above 33,000. NASDAQ is up 1% at 12,668. That's the NASDAQ 100. S&P future is up 30 points at 41.38. FTSE is up just over 1% at 76.32. Eurostoxx 50 up 36 points at 38.20. To the currencies, sterling is up a third, 125.26. The euro is up about 0.2 at 107.32. The dollar is unchanged versus the yen. Dollar is unchanged versus the Swiss franc, and also against the Chinese yuan. Let's have a look at the Russian ruble. Russian ruble is at 62, so the dollar is dropping back versus the Russian ruble. Maybe that will give room for the Russian central bank to cut rates again. When they cut rates, I think the dollar rallied to 66, and now it's dropped back to 62. Aussie dollar is unchanged, 72.10. The dollar is down 0.2 versus the Canadian dollar, 125.70. And the Kiwi dollar is up about 0.2 at 65.14. To the general commodities, WTI crude is unchanged, 117.50. It has traded up as high as 119.30. So we're approaching 120. Again, yeah, that's could be a sign that China, US, maybe not the US, but China and other countries are accumulating oil to store it because they see something on the horizon, something geopolitical. Brent crude is unchanged, 119.40. It's been as high as 121.30. High-grade copper is down 1% at 443.80, and US nat gas is up 3.6% at 881. We'll finish off with the 10-year yield. 10-year yield is unchanged at 2.95%. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And yes, I wish you all a great day. Take care. Bye.